When we look at many countries right now in North Africa and Middle East, there is a historical transformation process going on. In some countries, it is probably more calm, easier. In some countries, it is going through huge challenges. But Turkey was able to complete these reforms in a timely way, and actually what we have been doing in Turkey has become an important source of inspiration for many countries in our neighborhood. So in a way, we were able to prove more and more that Islam and democracy can coexist and function in a proper way. A country where most of the population is Muslim can also be a country where fundamental human rights and freedoms can be practiced to their full extent. Although many countries do such kind of reforms in their development phase in one way or another, we thought that it is important for Turkey to have an external benchmark, to have an external anchor. European Union writes reports about Turkey, Commission reports, Parliament reports, and this external reporting, although sometimes we don't like it, sometimes we are angry with it, at the end of the day, helps. Because there are so many countries in the world which call themselves democracies. But when we actually look in the way how the system functions, it is difficult to actually define those countries as democracies when we look from outside. So the European Union process for us was important for that reason, especially for our domestic political reform efforts. And we passed many thresholds forward, and the fact that we have a much better political stability in Turkey right now is mostly due to the factors of the reforms that we have done timely. Another set of reforms which we have made was in the area of economy. We have made reforms in social security, in healthcare system, in our banking system, in public financial management and control system. We have gone through an enormous fiscal adjustment process. In 2002, when I started as Minister of Treasury, Turkish Treasury was borrowing at 66% interest rate. Inflation was at 30%. Our budget deficit was 12%. In 4 years, we were able to decrease that 12% deficit into a small surplus. We were able to bring down inflation to single-digit figures. We kicked out 6 zeros out of our currency at the end of 2004. Our central bank, which is an independent institution, has done an excellent job of implementing monetary policies in a very prudent way and taking price stability as the main priority. And as a result of all these steps, we entered the 2008-2009 crisis with a strong banking system and with strong public finances. And in a way, the impact of 2008-2009 crisis on Turkish economy was limited due to these two main factors. So big budget deficits, big public debt, and weak financial system of many developed countries were probably the main reasons behind this crisis, and all those areas were actually our sources of strength. Not only how we entered this crisis, but also what we have done during the crisis was quite different than rest of Europe. In 2009, at the peak of the crisis, when many European governments were announcing fiscal stimulus programs, we announced a 3-year fiscal consolidation program. Many European governments were thinking that by having tax cuts or by increasing spending, they were able to get out of the crisis situation. But as I said at the beginning, for countries where public debt could be considered as a source of concern by the markets, more deficits, more spending hurts the confidence. And when the confidence is hit, it's very difficult to have economic growth in a country. So when we announced this fiscal consolidation program, there were some, of course, doubts. Some thought this was a surprise. This was not anything like that the mainstream was doing in 2009. But then what happened was confidence got stronger and stronger in Turkey very fast. Despite the crisis, deep crisis in Europe, Turkey was able to differentiate itself by giving the message to the markets that public finances in Turkey is never going to be a problem. Debt sustainability of Turkey is never going to be a problem. So this strong message was taken by the business community, by the financial markets, and in 2010 our growth rate was 9.2%. In 2011 it was 8.5%. And the growth came purely from private sector activity. Government spending had no contribution to our growth rates since 2009. When confidence was there, banks were eager to lend, companies were eager to invest, and consumers were eager to spend. And this generated high growth rates in Turkey. Since 2009, we generated 4 million additional jobs. And this is one of the highest figure of the ILO, International Labour Organization member countries. In addition to the high job creation, also income distribution in Turkey improved, not only since 2009, but even since 2002. So our Gini coefficient has been going step by step downward, and fighting with poverty also was one of the main reasons of this good result. In Turkey, we have now no population which has an income of $1 per person per day. We have no population which has an income of $2 per person per day. And even when we look at the $4.3 threshold of the World Bank, it was 30% of our population which was below that threshold in 2002. And last year it was only 3.6% of our population. So although our per capita income is now $10,500, this is at market exchange rates. With PPP adjusted, it is more than 15,000. But when we look at how this income is distributed, only 3.6% of our population live with an income of $4.3 per day per person or less. And also our banking system stood very, very strong during this crisis. No Turkish bank need any kind of government support, no central bank support. Even we didn't change our deposit guarantee scheme. The reforms that we have done with the banking system before the crisis protected our banks during the crisis. Even those American and European banks which had deep problems at home in their home markets, their Turkish subsidiaries stood very strong because in Turkey they had to follow our strict rules. Strict rules means what? Just a few examples. We introduced personal liability to bank shareholders and managers. We did that back in 2005. So major shareholders of the banks and top management is personally liable. This is very different from the mainstream, but it helped. Because when banks get into trouble, then if it is only the limited capital that's kept in the bank, which the shareholders lose, maybe it's not that much. So when banks are doing well, they get profits. When banks are doing well, management gets bonuses. And when there are problems, just the limited capital is there, and the managers just pick up their stuff and leave their rooms, and that's it. We thought that should not be the way. So that personal liability helped us. Also for mortgages, we introduced 25% down payment requirement so that loan-to-value ratios in Turkish banking system's balance sheet is quite strong. Also for consumer credits, we banned foreign currency. We thought that if our consumers are getting their salaries in Turkish lira, they should also have their debt in Turkish lira and not gamble on exchange rates as consumers. So such detailed things helped us throughout this crisis. And now the average capital adequacy ratio of the Turkish banking system is at 16%, and the minimum we require is 12%. And we raised it 8 to 12 back in 2006, way before the crisis, and that also helped to protect the balance sheets of our banks. So far so good, but then during especially in year of 2011, we observed the risk of overheating in Turkish economy, and our current accounts deficit was increasing due to high consumption and low saving rates, and that's why we started to tighten things again. So as I said at the beginning, we tighten things during good times and have room for loosening during difficult times. So at the peak of our growth, when growth was at 9.2%, we started to take macroprudential measures and monetary policy steps by our central bank to contain the current accounts deficit and also to keep inflation under control. And because of those steps that we have taken, the growth rate of this year is going to be probably about 4% or so, which is going to be the highest growth rate of Europe, of all the European countries. But of course, compared to 9.9% or 9.2%, 8.5%, it's lower, but we believe that is more of a sustainable growth given the circumstances and given the risks. What to expect for future? We are from now on, we are concentrating on reform areas like education, like judiciary, because we believe that our courts should be reliable courts, and that's why we are now upbeating our reform efforts in the area of judiciary. Because only if we become a true state of law, then we are going to move from being a mid-income country to a high-income country. We don't want to fall into a trap of being a middle-income country for a long time. And education and judiciary, we believe, are two important areas to propel us forward. Of course, labor market reforms are going to be important in the months to come. Also, we are repositioning Istanbul as an international financial center. We have made many laws and many arrangements for that, and it's already gaining ground. IFC, for example, an arm of the World Bank, has opened its very first office outside Washington, D.C. in Istanbul for Eastern Europe, for North Africa, for Middle East, and for Central Asia. EBRD has followed the same course. We are now observing many banks opening subsidiaries or branches in Turkey, not just for Turkish market, but for the whole region. On the corporate side also, Istanbul is now being more and more chosen as a regional hub for multinational companies. For example, Microsoft has chosen Istanbul as a regional hub for 79 countries. Coca-Cola has chosen Istanbul, the regional hub, for 93 countries. So Coca-Cola office in Istanbul oversees all the Eastern European, Russian, African, Middle Eastern, Central Asian market, all the way to India, including Indian operations, are now coordinated out of the Istanbul office. Istanbul logistically is an important hub, I would say. Turkish Airlines is now the third largest airline of Europe. Okay, we are the sixth largest economy in Europe, but Turkish Airlines is the third largest airline in Europe. And also, I think human resources is playing a key role. Turkish professionals, Turkish businessmen, they find it very easy to do business, whether in Europe or in Middle East, in North Africa, in Central Asia. So I think this cultural ease of doing business is also an important element. But I think when I talk about these in Kuala Lumpur, I think it will sound very, very familiar, because like Kuala Lumpur and Malaysia being an important business hub for this region, likewise Istanbul is becoming an important business hub for that part of the world. Not only actually Turkey is becoming more and more industrialized, but also our agriculture sector is growing. Usually one would expect moving from agriculture to industry, but in Turkey agriculture is also moving fast, and we are now the 7th largest country in the world in terms of the agricultural GDP, and we will be number 5 in probably 8 to 10 years. We think that it is strategic, it's important to keep the agriculture sector alive and moving on for future. Tourism is important. We have become last year the 6th largest tourism destination of the world by having 32 million visitors, and it's another area which is helping our overall external balances and GDP as well. Well, maybe I should stop here, but again, thank you very much for invitation, Governor Ziti, and thank you very much for this wonderful organization, which I understand will going to take 3 days, and discussing the very different aspects of Islamic finance in a country, Malaysia, which has been the pioneer in this field, is going to be very important. It's going to be enlightening. We have our colleagues from Turkey, but also about 50 other countries, and I wish that the discussions which will be made here is going to bring beneficial results, is going to bring new ideas and more of an interconnected approach when we talk about Islamic finance. Thank you very much.